Hi, it's Kurt Frankenberg again with Radioactive Trading, and we're comparing hedge strategies today. Now, here's why so many people are leaving the covered call strategy as it's taught today and going for something better. It's because they're beginning to think about it. If it was something other than a stock investment, and somebody came to you and said, look, I've got two choices. One of them has limited profit potential, but I have a pretty high risk. And the other has an unlimited profit potential and a very low controlled risk. Which do you think I should do? Well, you wouldn't have to think very long, would you? Would it be the one with limited profit and a risky holding period? Or would it be the one with unlimited profit potential and a low single digit predetermined risk? Well, it's kind of a no-brainer, isn't it? So why do so many very smart people get duped into choosing a strategy that is good for only one kind of market and not for many others? Well, I'll tell you why. It's because the idea of taking income from a stock that you already own is downright sexy. It sounds like a really fun idea. And the idea of buying insurance for your stock positions is not sexy. Well, let's do a comparison. After all, both of these covered call and Mary put strategies, both of them involve adding a bearish options play to stock. You own stock. If you short a call, that's a bearish play that kind of hedges in case the stock goes down. And if you buy a put, that's also a bearish play that insulates you against a downward move. Okay? But the only thing is that the covered call limits your profit if you were right in the first place and picked a good stock, and the married put does not. Let's compare. Here's an actual trade that was submitted last Friday the 13th, Friday the 13th, November 2009, by one of my subscribers. She's a cover call trader and did a real good job. She got into C-Trip at $57.88 a share. Also picked up premium of $2.30 for selling the November $60 calls. Well, that's pretty good. It made her cost basis $55.58. And here on this day, who knew that the stock was going to go way up to here in the next 9 days? Well, she hadn't, because if she had, she probably wouldn't have sold a call right away. The covered call play caps the gain. All right. And it's likely that on the 20th, C-Trip will still be way up above 60, but she'll have to deliver those shares at $60. And her cost basis, of course, was $55.58. So she'll make a profit of $4.42. Now, wait a minute. Is $4.42 a good profit? Well, yeah. I mean, no matter which way you slice it, it's a good profit. It's $4.42 per share after all. Or if it's 300 shares that we're playing, then that's $1,336. Let's look at the time frame. In just 16 days, she was able to pick up 7.9% return. That's better than a lot of folks do in a year. And if we were to annualize it, I don't like to annualize returns because I don't think it's the most honest way to make projections. But this is possible. Okay, if you were able to get in and get out with that same rate of return all year long, it would be 181%. Well, that's pretty good. But let's look at hedging with a long put instead of a short call and doing it according to the principles in the blueprint available at radioactivetrading.com. If we had purchased shares of C-Trip at the same price and at the same time gone out 7 months in time and bought the $65 in the money put options for $13.70, that looks like a big chunk there. Our new cost basis is $71.58. Okay, but as the stock goes up, we're not nervous about it crashing. If the stock did crash, we would only lose the difference between the put and the cost basis. That's 9%. Now, as the stock is going up, we're doing well because guess what? There's no cap on the upside. As C-Trip goes up, we end up selling the C-Trip shares last Friday for $72.19, selling the puts also, which have gone down, but the net position is up. $79.89 minus the original cost basis of $71.58 is $8.31 in profit. Well, would you rather have that or the $4.42? Would you rather have $13.36 or nearly $2,500? Would you like to do it in 16 days or do even better in 9 days? If we annualize it, that's 470%. Listen, come to our free webinars every Tuesday and Thursday and find out what you